Now, the rupee is again in the news for the right reasons, and some would say for the wrong reasons. What are the right reasons? The RBI is saying that it wants to internationalize the rupee. We'll come to that later. The wrong reasons: oil companies have been reported to have bought Russian oil with Chinese one. That is not acceptable, and this is what we shall be discussing in this issue of On Point.
Instead of local currencies, India could be paying in the Chinese currency.
First, when people hyperventilate on yuan, I would advise them to relax. Why? India is not borrowing yuan. Nobody should have any doubts on that score. How does the Chinese yuan come into the Indian economy? Well, India runs a trade relationship with China, like with any other countries. So it imports and it exports. From that relationship, from the transactions that happens, the Indian companies, in this case the oil companies, would be having access to the Chinese yuan. And remember, since India imports far more, that means it pays to the Chinese economy, and that payment goes in dollars. The Chinese economy, when it buys from India, it also makes the payment in dollars. So essentially, the Reserve Bank, as the custodian of the currencies, does never have any major pile of yuan to hand out for banks to buy. So that's the first amount. That when oil companies are buying, or if they have bought, and first of all, it's not yet confirmed that they have done so, but if they have done so, it would have been in a very limited amount. But the larger issue is, why are the oil companies finding it difficult to pay for Indian imports of oil in rupees? And that takes us to the core of what we are discussing today, which is the internationalization of rupee. Now, what does internationalization of rupee mean, or of any currency means? Broadly, when in any country people buy and sell goods, they use that country's currency. So in the case of India, it is rupee. In the case of our neighbor Bangladesh, it's in taka. In the case of Indonesia, it's rupiah. In the case of England, it is the pound sterling. In the case of USA, it's the dollar. Now, let's look at international trade. In a perfectly balanced world, what happens with international trade? Whatever is bought by one country is matched by another country's sales of goods. So that means neither of the trading parties are essentially exchanging practically any currency. Whatever they buy from each other's currency, they sell to each other. So it is perfectly balanced. That does not happen. For instance, India runs a trade surplus with lots of countries. It also runs a trade deficit with lots of countries. In the case like in China, it has a trade deficit. With USA, it has a trade surplus. That's inevitable. And in the process, what happens is countries end up with stocks of currencies in their portfolio. What is this basis of internationalization? Well, what happens is, when an economy gets stronger, when more of its goods are sold abroad, then people develop the confidence to pay for those goods using that country's currency. It has essentially got nothing written. There's nothing law which says that a currency can be used therefore outside the country. What essentially happens is that the currency gains traction. It gains acceptance. Now, in these days, when protectionism, not just in India, but across the world, is becoming the dominant buzzword, one thing that a currency's internationalization entails is actually globalization, giving up control to some extent over the movement of that currency. We'll come to that later, but first let's look at again what the internationalization means. There are two parts to it. One, essentially allowing or rather encouraging more buying and selling of goods of that country's commodities in that currency, which means RBI would be essentially be encouraging companies, countries, whoever is buying Indian goods abroad to pay for them in Indian rupees. And that is what RBI is doing. In fact, as we speak, the Reserve Bank of India is holding discussions and has been successful with several countries to make them accept the rupee as the medium of currency also. It's not the only one that they will accept, but they will also accept the Indian rupee. So trade is one big way in which the currency gets accepted abroad. Now that extra reserves which countries end up accumulating because of the trade, and I'm just looking at the trade, does lead to tricky situations. What are these tricky situations? The country ends up either, in the case of surplus, holding what? Basically reserves of that country which it has bought from you but has not been able to sell to you, so therefore they end up sending you currency. So one country gets larger reserves, like in the case of USA, in our trade relation with USA. In the case of China, the reverse happens. That country doesn't buy too much from us, but we buy a lot from them. So in the process, what happens is we pay from that reserves that we have accumulated to the country with which we have a deficit. This balance, as I said, is tricky because it means that there's currencies continuously coming in, there's currencies flowing out. Today, India is a very large economy, the 5th largest economy in the world. So therefore, it has the ability to allow for this flow of currencies to and from the country's reserve bank. But when those happen, the risks are also of another type, which is that they import inflation into the country. So, for instance, as it happened in the case of 2020 and 2021, when India had low inflation, but because there was inflation outside and we were buying oil, that inflation got imported into the Indian economy. Now, these things will happen. You import inflation at the same time. If your country is able to balance its economy, keep low inflation, then those reserves are called upon less. The country is able to trade on a more equal basis. So you can see what the problem is, that in the internationalization of the rupee, management of the domestic economy by allowing low inflation and yet allowing a lot of goods to come in and out becomes necessary. It can't be a one-way street. We live in this world, so the countries will be negotiating with each other. Like in the case of USA, we are running a trade surplus and USA is miffed, and so it is pushing India to cut down that trade surplus. So we are importing more oil from USA. It's not necessarily the best bargain, but we are doing to some extent to ensure that we buy more from USA because there are not too many things that we can buy from the USA. The sort of goods that they export is not really very cost competitive. Whereas with China, there's a lot of things that we are buying on a cost competitive basis. So essentially, internationalization of the rupee means there'll be a lot of exports, which is good news, but there'll also be a lot of imports. And all this flow will have to come along, which means that the government of the country has to be more relaxed about the flow of goods and services from within and out of the country, which possibly means that you cannot have very high import duties. Now, these are considerations that need to be brought in. This leads to the next item that we had flagged at the beginning, the topic of flow of bonds. Now, in India, what the government does is, when the government borrows, it goes to its own banks insurance companies and borrows money from them to pay for part of the fiscal deficit. Because the Indian economy is well run, because the Indian government manages to keep its fiscal deficit within control, there is always a large amount of demand from foreign investors to be able to invest in the Indian bond market. The Indian government also traditionally allows this flow. That means it allows a certain percentage, only a certain percentage, to be taken into, or rather to be bought by foreign investors. As the Indian economy has grown better, two things have happened. First of all, the size of the bond market therefore will tend to expand, because not only the government, also the private sector companies would want to borrow from the market, and foreign investors will also want to lend to the Indian economy. Just as they come and buy shares, they would also want, and they have said that they want Indian bonds. Now, in the past few years, the Indian government has actually said that it has welcomed the idea. So what it has done, it has said that it has started negotiations with major organizations across the world to allow for Indian bonds to be listed in what is called those bond indices.
The buzz around India's inclusion in the Global Bond Index is growing stronger. The nation has been preparing for this remarkable milestone for quite some time.
I won't go into the details of what these bond indices are. We have talked about it earlier, but the point is that there's a sufficient amount of interest there. But what the India government is saying, and rightly so, is that we want the clearance mechanism. That means the bonds should be settled by Indian authorities, Indian market makers. Now, this is a demand that a powerful economy can always make. But as it stands now, the foreign investors are not really willing to come that far. They may later, but as of now, they have not come that far. So what has happened is that the Indian bond market's expansion with foreign investors coming in is not happening. Now, when that is not happening, to continue with our foreign exchange story, or rather the internationalization of the rupee, that means that the rupee can be settled only by one leg of the foreign exchange transactions, which is the trade flows. The flows which can come in through the bond market, foreign currency coming in, buying up of Indian bonds, so therefore raising the demand for Indian rupee, that will not happen. Now, if that doesn't happen, that means the entire currency convertibility, entire currency exchange issues depends only on trade flows. As I said, this is going to be a slightly heavy going today. So just also one more particular aspect to this story, which is that if the bond market had expanded, it would have actually helped the Indian banks. How? Because the Indian banks, what do? Or any banks for that matter. Banks lend for often infrastructure projects, but these are long-term projects. The investors, or rather the people who make these projects, what they do is they allow the banks an escape route after a couple of years by floating the papers of these projects in the bond market. Now, if the banks have lent to the bond market, to the investors are floating those papers in the bond market, it stands to reason that the banks will not again be buying back those papers, because banks want to get out of those projects. So who will be buying those? Another class of investors, which means often investors from abroad. Now, it's already happening, like the REITs, the InvITs, but it's not happening at a scale to allow banks easy exit from the projects. So in a way, the bond market's lack of expansion is actually hurting the capacity of the Indian banks to lend more for projects within India. So there's a cost that we are running. So again, to sum up, what are we trying right now? What the government is trying right now is to encourage more people outside India to use the rupee. But because we are being protectionist. We are saying that the import duties are not coming down fast enough. The internationalization of rupee through the trade route is taking time. What does that mean? Let me come back to that oil story. Russians are buying or rather selling oil to India. They're getting Indian rupee. Now, when they get the rupee, what will they do with the rupee? They will want to use it to buy something or other. As of now, they can buy only from the Indian market. But what if they, for instance, went to say Indonesia or to Japan or to any other country and bought their products, paid for it in Indian rupee and went home happy? Now you would say, who's stopping them? Well, the thing that's stopping them is that when we allow for internationalization of rupee, these are the sort of rules as of now which rather guides, circumscribes the use of rupee. Rupee can't be used to buy goods between third parties. It can only be bought as of now for trade, for somebody to buy from abroad into Indian market and take it out. So that means unless that happens, the incentive for a country, like in the case for Russia, to take payments in rupees is circumscribed. And this is where the challenge is coming in. This is what the Russians are saying. And after all, every country looks at its own self-interest. It will not stack up, hoard of the rupees unless it is able to buy that rupee, or rather use that rupee to buy from other countries. India has a risk that if that rupee is used in some other place, supposing it's used for contraband, supposing it's used for arms, supposing it's used for something else, then what happens? Well, actually as of now, a lot happens because rupee transactions will finally be settled by Indian banks, because one leg of the transaction has to happen through Indian banks. And if it happens through Indian banks, then if Russia has violated a sanction, then that transaction shows up on the records of the Indian banks. And Indian banks naturally, obviously, will not want to fall foul of the sanctions. So, RBI has to allow the rupee to be traded between countries without reference to India. So, there has to be a clearing mechanism outside India. These are complicated things. It's almost something similar to the bond market, allowing for a transaction clearance mechanism outside. As of now, this is the biggest obstacle to the internationalization of the rupee. To what extent do we allow our Indian economy to be linked to the rest of the world, where the flow of currencies is happening? We allow, as of now, that we understand globalization, we understand it as sales of goods from India to abroad, but that's about it. To be able to allow rupee to move across the different 7 shores, we have to, right at the beginning, as I said, give up some control over how the rupee trade is settled between other parties. When that happens, we'll have much more demand for the Indian rupee. It obviously can bring in risks of convertibility. It also means that India, there are other issues like how much bonds and others do we float in the market. We'll go into that in some other day. But as of now, this is the basic challenge. And on that note, that's all from this edition of On Point.